Hello everyone. Today let's go back to our childhood times. Flashback time. So do you remember when you would get a report card on the final day of school during parents teachers meet? Huh? Some of us have good memories and some of us maybe not that really great. So the report card showed your overall performance for the year. It accessed your scores and your behaviors that year. That is exactly what a credit score does too. Your credit score is like a report card for your money. Similar to how your school report card informs your parents about how responsibly you have handled your assignments, credit score demonstrates to lenders how you handle your money. A high credit score is equivalent to receiving an A plus in money management. You have been careful with your loans, paid your bills on time, and kept your credit card balances low. However, having a poor credit score is equivalent to receiving a failing grade in money management. You have maxed up your credit cards, missed payments, and been reckless while taking out loans. So, just like you wouldn't want to bring home a report card with bad grades to your parents, you don't want to have a bad credit score when it comes time to borrowing money. In school, your teachers or your principal gives you your scores, correct? But who gives you a credit score? Well, credit scores are issued by agencies known as credit bureaus. In India, CIBIL is the largest lending information bureau. They calculate and devise methods to calculate credit scores by themselves. Hey, but wait, why is this credit score so important? Well, based on the same, lenders will approve your loans. See, a low score indicates higher chances of default, and this certainly discourages institutions from lending you money. If you have a higher score, there is a better chance of that loan getting approved. As low grades means more punishment, similarly, a low score means higher lending rates. Some insurance companies use credit score as a factor in determining premiums too. A lower credit score could therefore result in higher insurance premiums. As already mentioned, a credit score favors those who make timely payments. It can help them get a better rate of interest. A credit score is also a blessing for lending institutions. It helps them figure out who to lend to and what rate of interest to give. A high credit score can also lead to better loan terms, such as longer repayment periods or lower fees. अरे सबको पता है ए प्लस मिलने का मजा ही कुछ अलग है बॉस. But wait. How is this score calculated? Huh? See, these agencies get data about a person's credit history from a variety of sources, including banks, lenders, credit card issuers. So the exact formula is not really available to us. However, there are a few factors which are considered while calculating this score. Let me share a couple of them with you. Number one, payment history. This details whether or not a person has made credit card payments on time or late or maybe not at all. Number two, credit utilization. Now, this is the amount of available credit that is currently being used by a person. Higher credit utilization may be a sign of increased default risk. Number three, length of credit history. This is the period that a person's credit accounts have been active. A longer credit history can often be considered a plus. Number four, types of credit accounts. Now, this includes the types of credit accounts a person has, such as a credit card, loans, mortgages. A mix of different types of credit can be seen as positive. Number five, recent credit inquiries. Now, this refers to how often a person has applied for credit recently. Too many credit inquiries in a short period can indicate a higher risk of default. Okay. All of this seems fine. But what is an A plus equivalent in a credit score? Well, the scale ranges from 300 to 900, with 900 being the highest, of course, denoting maximum credit worthiness. A CIBIL score of 750 or above on your credit report is ideal. Now that you have understood what credit score is, hurry up and calculate yours. Link is in the description. Work on the same as it plays a very crucial factor in loan approvals and is a direct reflection of your money management skills. Make sure you are being responsible with your finances so you can get an A plus credit score. If you have liked this video, then do not forget to drop a like. To know more about finance and see more such informative videos, do subscribe to Spring Money. Until then, this is Sakir and see you next time.